Right now, it's time for a read on the consumer. Steve Liesman joins us with the latest results of the CNBC NRF Retail Monitor. And Steve, what'd you find?
Beck, it looks like consumers have taken a break between the strong holiday spending season, strong summer season, and the holiday season, with the CNBC NRF Retail Monitor registering a decline after 7 straight months of gains. The Retail Monitor, powered with actual credit card spending data from Affinity Solutions, shows spending down 0.3% when taking out auto and gas. That followed a half-point gain in August. Spending grew 0.6%, a meager 0.6% year over year. Taking out restaurants, what we call core retail, shows a similar 0.3 decline and a 0.9% year over year gain. The decline was broad-based, with only 3 of our 12 sectors showing any gains. Take a look at some modest gains in there. Non-store retailers, that's digital sales, up 1.6%. Clothing and accessories up 1.1%. You may remember there was quite a bit of inflation in the apparel numbers yesterday. Health and personal care, a meager 0.04% gain. Gas stations were down. Furniture and home furnishings were down, along with building and garden supplies as well. Our initial read of the data is that it was too early to pick up any effects from Hurricane Helene, though there could have been some impact at the very end of the month. Hurricanes, of course, can boost spending ahead of a storm's arrival, for example, in building supplies and food, reduce them, and then see them increase somewhat again as rebuilding begins. If it wasn't the storm, well, it leaves open the question of what prompted the drop. Spending has been relatively robust through most of the year, but weakened a bit from August, in August from July, before turning negative this month. Economists have been forecasting a spending decline in the aftermath of the pandemic. That hasn't really appeared yet. Well, NRF economist Mark Matthews tells me September is historically one of the weakest months for retail sales, since it's sandwiched between big summer spending and big holiday spending. October numbers will probably have some real impact in there from both Helene and Milton. NRF economists also see consumers in pretty good shape, with low unemployment, real income gains, and low inflation in the goods sector generally. So, guys, we're going to be working with Affinity and the NRF to mine the data for impact of the hurricane, both on the states that were impacted and the broader national effects. We haven't done it before, Becky, but we can actually mine this data down to the county and zip code level.
Wow. Steve, that matches up pretty similarly with what we heard from Bank of America and their surveys that they do on the consumers that they have access into, seeing what their spending patterns are. I guess at this time, not knowing what any wobbles in the data mean, you know, you've got to wait and see if it was an impact of these storms. You got to kind of hold out and see a little bit. Does that lead the Fed to a position where they might actually pause because they don't know if this data, exactly this data is telling them at this important time? And I did hear your interview yesterday with Austin Goolsbee. I know you tried to pin him down on that, and he kind of wiggled out, didn't want to answer it. But what are they thinking? Yeah, you did try. Valiant effort.
Yeah, you got to try. But here's the thing. I don't think the Fed pauses here, because I think what the Fed is doing is not really related to the current data. I think the Fed, look, Powell used this phrase recalibration 11 times. I take him at his word that he's recalibrating, which means that, to me anyway, that you're not adjusting data for the current data. The amount and pace of your cuts is going to be dependent on the data. But the idea that you want to bring it down towards a more neutral level tells me they can cut a quarter and not worry too much about getting too close to the bone, so to speak. And just to make a quick comment on the first part of your question, Becky, we're not going to know what's going on in October either. We're going to work to tease it out. I'm not saying it's going to be perfect. We're going to try to see what we can find, but ultimately, it's going to the data in October, from employment to GDP to inflation and also retail spending, is going to be, I guess, distorted by these hurricanes.
Hey, Steve, just on general principle, and you can tell me absolutely not, and then I can see a reason, because of our huge built-up debt, I can see a reason why you'd want lower rates, because we're spending so much on interest. But do you think the Fed is complicit or has to take any responsibility at all for sort of enabling us to get to $37 trillion and just keep rates higher just to try to put some type of governor on what we keep spending. Isn't it, the minute they make it easier again, it just seems like it greases the skids for more of the same thing. Should they take any responsibility, or is it better to lower rates so that we're not spending so much on the interest accruing?
Joe, I have a slightly different take on your question in terms of my answer here, which is imagine an arm of Congress keeping interest rates high because it does not want Congress to borrow.
Yeah.
I believe that would be completely out of bounds for an arm of Congress to do so. You could imagine an executive branch doing that. Maybe the courts can do it. I don't know who can check Congress, but the Fed works for Congress. The Fed answers to Congress. And so if Congress is displeased with the extent to which interest rates are low or high, it has the ability to go and change the Fed's mandate.
So they can't save us.
There's a reason why the Fed...
Yeah, they can't save us. The Fed cannot save us from ourselves.
Greenspan talked about this. I just don't think it's the Fed's place, and I know the Fed doesn't think it's in its place to make interest rates higher or lower because of the amount of federal debt and to try to regulate.
They just need whatever they need to do. They need to give them the ability to do it, which is scary.
Well, that's the way the system's set up. If Congress doesn't like that system, if it's a bad system, they have to change it.
Okay.